First thing you want to ask yourself is, what state of the market? What state of the market am I seeing on the chart, right? So I'm going to keep it very simple for you. Just a second, please. All right. Keep it very simple for you. There are three states of the market that I want you to focus on. Number one, we have the trending market. The trending market. I hope you can see my screen very well. The trending market, right? Number two, we have the range, right? The range, what a lot of people call sideways consolidation, and then chubby market or thereabout. But just keep it simple. The ranging market, right? The called the channel. The channel. The channel. Is that clear? The channel. So the trending market consists of the uptrend and the downtrend. Very simple. When the market is going up, it's an uptrend. When the market is coming down, it's a downtrend. So, and you want to get yourself involved in a trending market so that you can join for the continuation. Of course, wait for the pullback to join for the continuation. For example, the market, you see the market going up, right? You wait for the pullback, then join, right? You see the market coming down, wait for the pullback, then join to sell. Very simple. But I and my students, I like to tell them, make range your friend. Make range market. Of course, the three states of the market is the trending market, the range, and the channel, right? Make the ranging market your best friend, and that's what I use oftentimes. So I'm going to show you what I'm talking about quickly in the chat right now. Make the ranging market your best friend. So look at what you have on the screen right here. You can see a particular point where market has been buying and selling. You see buyers and sellers agreeing on a particular price. So what I do is when I spot a particular ranging market, right, where buyers and sellers are agreeing on a particular price, they are unable to break out from that level above or below. I bring out my parallel channel 2, and I just showed you where to bring it out, right? You come to your trend line, right? This is a trend line, right? Touch the 2, the arrow that leads you to other 2s, bring out your parallel channel, try to mark out that area where you can see that range from the top to the bottom. Mark that area very well. So what are you going to do? Very simple. Going to keep it very simple. Very simple. You would do what? Apply the principle of what? The principle of what? Breakout. The principle of what? Breakout. Right? And retest. Very simple. Breakout and retest. Now, why retest? Why not just breakout? If you are already an advanced trader or a pro trader, when you see a breakout and you want to follow that trend outside of the break from the levels from that range, of course you can trade alongside the breakout, right? Because a pro trader, an advanced trader, a pro trader knows how to manage their risks, right? They know how to manage their risks. But for newbies, right? For new beginners, you also can manage your risks. But when you are making losses, sometimes your psychology may not have been built up to the point whereby you don't have control over your psychology, because that one, you need to be control over your own psychology. I can help you get control over your losses to be able to manage your losses, right? But that of your psychology, you need to stay in charge. I really don't think an external force can help you manage your psychology. Of course, there's a little bit of motivations that can come from external forces, but you as a trader need to manage your psychology for yourself. All right. So keeping it very simple. If you are a newbie, you apply the principle of break. You see the breakout from the range, right? Then you wait for the retest, then you strike, right? Let me show you what I'm talking about. For example, you see the market ranging from one point to another. You bring out your parallel to mark that area. What are you expecting to do? To wait for the breakout. When you see that breakout, a professional trader knows what to do to enter that trade and stay in control. Of course, when the trade goes against that professional trader, he or she's psychology is already built up. Of course, I'm not saying that the professional trader psychology cannot be messed up. Yes, a professional trader psychology can be messed up as well, but the experience of that professional trader is far more cannot be compared to that of the newbie. So for the newbie, you wait for what? A retest. A retest around the line or the level where the break happened. Then what you need to do, bring out your for this kind of market, you want to sell, right? You want to sell the market because the breakout happened below. So you bring out your short position and placed at exactly at the spot where the market broke from, right? So you have something like this on your chart, right? And like I tell people, you are the only one who can tell yourself what you are willing to risk, what you can afford to lose, because you are the only one that have access to your account, right? So maintain a 1:1, 1:2, 1:3, 1:4 risk to reward ratio, or 1:to unlimited as far as you can go. All right. So what about the SL, the LSL, what you are willing to risk? I tell newbies, just use a 10p stop loss. In other words, when the price goes against you 10 pips, and the 11th pips knocks you out and take you out of the market. In that way, if you are using a 0.01, which is a micro lot size, you on a Euro USD 0.01 micro lot size for 10 pips, that's about $1 lost. But for someone using a 0.1 mini lot size, a 10 piece is approximately $10. But for someone using one standard lot size, for someone using one standard lot size, right, 10 pips is $100. So what you do, just move down your SL, your short position to move it down. Sorry, mine is trying to take time to do. Okay, move it down and target 10 pips. You can see on the screen, I'm trying to get 10 pips, for example, 10 pips, 10 pips. That's what I'm looking for, 10 pips, right? That's what I can afford to risk, 10 pips. That's what I can afford to risk. But the normal way of looking at this is looking at the previous low that has happened before, like, right? Look for the previous low that happened before. Check if your account can bear the risk. Then you position the loss to that point. Then you target a 1:2, 1:3 risk to reward ratio. And if the market goes in your direction, you hit a take profit. So something like this, the market going into your direction, keeping it simple as that, right? So let me show you what I just did right now in the chat, right? But for this particular settings right here, what you have here, bringing on my parallel channel 2, you can see if you watch closely on the 15 minutes time frame, you may not be able to spot out the retest, but I can spot out the retest if I go to my 5 minutes time frame. So what you need to do when you confirm that retest aligning in the breakout point, and other confluences you need to look out for this kind of bullish movement, you look out for a bullish confirmation, bullish chart pattern backing up with that bullish trend for you to ride on with, right? So you bring out your long 2. In this case, you're trying to go long because you're buying, right? Bring out your long 2. The same thing that we did there, you position for what? A 10 pips stop loss. That is what you can afford to lose, right? A 10 pips stop loss, and you target 1:2, 1:3, 1:4, thereabout, and that's it. That's how we make whatever we're gonna do. That's it. Keeping it very simple. All right, that's it. All right. So I'm gonna come again, and I trust that the next time I'm gonna come in, we'll have a full house. So I try to say this, please. If you want me to keep on doing this, of course, that is an external motivation I need from you, right? To keep me on, to keep making more videos for everyone, for myself, for you. I'd like you to just please hit the subscribe button and try to see if you can help me to share the live every time I come out here to do a live video. So I just told you how to look out for a range in every trade you want to take. You must not get involved in every trading opportunity, but that opportunity that aligns, that opportunity that aligns, oh my God, my system went off. My system is going off. Can you hear me? Oh, my system is off. I think my system just went off right now.